I remember when I first heard of the term investing. During my freshman year of college at the University at Albany, my roommate showed me a book he was reading. It was titled Rich Dad, Poor Dad. Judging by the title and the cover, it looked like a complete and total scam to me. But he insisted that the book revealed crucial insights as to what the rich do that allows them to stay wealthy, but I didn't believe it for a second. Fast forward to my junior year of college, and as I was doing research on how to become more financially literate, Rich Dad, Poor Dad was a book that kept popping up on everybody's lists for books you should read. So finally, I gave the book a shot, and I'm so damn grateful that I did. This book, along with a couple others on wealth and investing and the plethora of YouTube videos that I've watched on the subject, have allowed me to consistently make more money than I spend and manage my money wisely. And through the use of these books, I've managed to build a portfolio that is sitting around a 50% return this year. This is going to be aimed towards beginners. It's going to be kind of a hybrid video on how I manage my money, what I spend my money on, and how I got started with investing and what I invest in now and why. And a quick disclaimer, I'm not a financial advisor or a financial expert. Do not blame me if you lose money, because I am not an expert whatsoever in this field. I'm just showing you what's worked for me. Before I reveal my portfolio that has boasted about 50% return in the last year, I want to go over the basics for people. So what exactly is investing? Put simply, an investment is something that you buy that you think will grow in value or pay you in income in the future. One of the key takeaways from the book that I mentioned earlier, Rich Dad, Poor Dad, is the distinction between assets and liabilities. An asset is something that is expected to increase in price over time. It's something that puts money in your pocket. For example, stocks, real estate, crypto, bonds, stuff like that. And liabilities are something that takes money out of your pocket, like cars, vacations, clothes, eating out, or unused subscriptions. What I've really focused on when it comes to investing or buying anything is really focusing on, is this going to be an asset or is this going to be a liability? What differentiates the rich from the poor is that the rich focus on buying more assets than liabilities, and then the middle class and the poor are usually so focused on buying liabilities. The reason I live a minimalistic lifestyle and I don't spend my money on a lot of things and I don't overspend on things that I don't need to is because I want more money. I want to have more money to invest in assets. My income has been steadily increasing this year, but the amount of money that I've been spending has not, which means all that extra money has just been going into my portfolio and other assets. And that's the problem with so many people. Once they get their hands on an unexpected amount of a lot of money, or they get a raise or something like that, they start spending more instead of investing more. And that's the type of philosophy shift you really need to be rich and wealthy later in your life. What I suggest you do is to track everything you spend money on for a few months and then evaluate it. What are the things that you can take out of that you can instead spend on assets, things that are actually going to make you money. But in order to actually buy assets, we need to know what to buy. So now that we have kind of a general idea of investing, let's go more into the type of investments that I do. So I have a portfolio where I do all my investments. A portfolio is basically a collection of financial investments, but the majority of my investments are in stocks. So what is a stock? When you purchase a company's stock, you are purchasing a small piece of that company, ownership of that company in the form of a share. There are many things that go into whether a stock is going to go up in price or not, but basically, if companies are successful, then their stocks are usually gonna go up. And to understand why investing is so great, other than just like putting your money in a savings account, we have to look at compound interest. When you put your money into a savings account, the interest rate is like something like 0.2%. But with inflation, which I believe is around like 2 to 2.5% each year, you're actually gonna be losing money if you keep your money in a savings account because of inflation. Whereas if you make the right investments and you invest in things like stocks, which have a much higher growth rate, you're going to be making more and more money pretty much every single year due to compounding. So what is compounding? This is the power of investing, really. It's why you should invest. Everyone's probably heard of this example, but it's a great example for compounding. Would you rather take $1 million now today, or would you rather take the end result of doubling a penny over 30 days? And you will see if you double that penny from its value of the previous day that eventually you're left with around $3 million. So eventually, if you leave a lot of money in the stock market and you keep investing over time to add even more value into your portfolio, you're going to end up after like 20 or 30 years with a lot of money if you make the right investments, of course. And even if you didn't put in money over the years, which I don't suggest at all, you'd still end up at the end of like 20 years with more money. How can we get started investing? Luckily, it's really easy these days. It's no longer safe for people who have a bunch of money saved up or are financial experts. You can start with $0. Now, the app that I've used for basically my entire investing career is called Robinhood. This was the first app to ever offer commission-free trading. And there's tons of other free trading apps like Webull, like TD Ameritrade, like SoFi, but I just use Robinhood because there's a $0 minimum investment, and it's the one that I've always used, and I just really like the whole UI of it. And now probably the most important question: what do you invest in? What I suggest for the common person like me who has a little bit of financial literacy but still wants to play it pretty safe is to mostly just invest in index funds. This is also known as an index ETF. I know it sounds really crazy and confusing. I'll explain it really easily. This is a stock that is based on a preset basket of stocks or an index. So it's like having a ton of different stocks in one stock. And one of the most important things for having a good portfolio that performs over time and that has less risk is to diversify pretty much as you possibly can. One of the best index ETFs is the S&P 500 index. The S&P 500 is an index of the 500 like most large companies in the US. And the companies on the S&P 500 change based on the companies that are doing the best and that are the largest companies over time. So you don't even have to worry about that. You invest in this stock, and it's basically like owning the entire S&P 500, which over time has netted about a 10% yearly return. So if the majority of your investments are in like index funds like this, also the NASDAQ index ETF, then you're almost guaranteed 10% yearly return over like 20 or 30 years, which is part of my philosophy with investing. Is once I put my money in, which I've had in for around a year or two now, I don't plan on taking this out for like 30 or 40 years. This is the philosophy of like Warren Buffett, the most successful investor of all time, pretty much. Just keep your money in no matter how the market fluctuates for 30 to 40 years. Invest in index funds, ETFs, and you will make money. Other suggestions: if you are around my age or if you're even younger, like the best time to start investing is now. There is no better time, because the earlier that you start investing is the earlier that you can take advantage of compound interest. Because I know that I'm not going to be taking my money out for 30 or 40 years, that means that I can take a little more risk than the average person who's like 40 or 50 and is just trying to get some money for retirement. So I've actually diversified even more than this. I bought singular stocks as well that I just really believe in. So now is the time for me to share the portfolio on Robinhood that has given me a 45-50% return in the last year. All right, this is my small portfolio, and as you can see, over the past year, I've netted 47% of a return. I feel like this has been a particularly really good year for the stock market after the crash that happened because of you-know-what. So here are my stocks. I have 2 in Snapchat. I just think that Snapchat still has room for growth, and just all the social media platforms, really. I'm just going with my intuition, what feels right, in companies that I believe in, which is also a super important thing about investing. The reason I don't have any Apple stocks is because I don't like supporting Apple. So obviously don't support companies that you don't really believe in. Or you can, you know what, I'm not the judge of that, but let's keep going. I have a share in Etsy. Etsy did really well for me, $114. When I think of Etsy, it's just like an online store for people to make their own stuff, and I feel like that is a really big future development. And then we have the Vanguard S&P 500 ETF. So this was the one I was actually talking about. I like to invest in ETFs from Vanguard. I think Vanguard is a really reputable company, and this is, like I said, just a collection of all the stocks on the S&P 500. So you can see in March, when you know what was happening, it really crashed. This was a great time to buy. I wish I bought more during this time. And this is just a very safe investment. Over time, it is just going to make you money, like this 5-year graph, shows you. So yeah, ETFs are always great. Microsoft, Microsoft is a big tech company I wanted to invest in. Starbucks has been kind of all over the place this year, but I think it just is a good thing to invest in. Facebook, of course. This one is a little bit riskier than the Vanguard S&P. It's a growth ETF. I invested in Nintendo because I actually just love Nintendo, and they're a stock, Nintendo's it's a decent company right now. Coca-Cola, Disney, Nike, all these one shares of stocks. As you can see, I try to diversify quite a lot. This is the total stock market ETF. So again, just an ETF that literally is a collection of everything in the stock market in one stock. So really you could just invest in ETFs, and that's what I suggest. Then I'm invested in some tech companies like AMD, Intel, Spotify. Alibaba's really not been doing too well, but that's okay. Sometimes you're going to take some L's. My total return is negative $43 on that. Nvidia, when I think of graphics cards, I just think of Nvidia. I think that they're still good and they still have growth. PayPal. And then I have a little bit in bonds. I have a long-term corporate bond ETF. So there are ETFs for bonds too. And bonds are a little bit safer of an investment over time than stocks. But if you are my age, I do think that you could just invest in index ETFs and you'd be totally fine in like 30 or 40 years. And then I have another bond ETF. This one's with iShares, also a good company. This one is for small cap stocks. I actually got advice from a stockbroker to invest in this one. Again, just another ETF that does pretty well over time. Then a high dividend yield ETF. This one's a little more risky than a stock market one, but I'm not going to go into dividends in this video. And now let's invest in crypto. A lot of you guys are probably wondering if I invest in crypto, and yes, I do. I think there's still a lot of potential for growth, and all the research that I do about crypto says buy it, and the best time to buy it is now. Even though Bitcoin is at its all-time high, I do suggest putting a little bit of your portfolio into crypto. With Bitcoin at almost 32,000 today, I've already gotten a total return of $1,000 on it. And Ethereum, I just started investing into, and that's really been going up, and I've already made $82 into it. So if we go to me here, you can see I have 40% in stocks, 37% in crypto, and 23% in ETFs. So that's my diversification. I think that I'm gonna lean more towards stocks because I think having like 40% of my whole portfolio in crypto is kind of risky. If you want to start investing in Robinhood and the type of stocks that I started investing in, you can actually go to the link in my description. It's a referral link that if you use it, you're going to get a free stock that I think is up to $500, like just by signing up. They're just going to give you a free stock. So that's pretty dope. So yeah, you can use the link in my description to go sign up to Robinhood and start investing with $0. And I hope that you start spending more of your money on assets and not liabilities. Thank you so much for watching this video till the end. Leave a like if you enjoyed and it educated you, so this video gets pushed out to more people who need to learn about the stocks and managing their money right and getting out of being poor, because it is possible with the right spending and saving habits. Love you guys very much. I will see you in the next video.